All right, greetings everyone. This is Eric, founder and CEO of Cubicle Investing. Definitely check out the website at cubicleinvesting.com. All right, guys. So today is April the 9th. It's approximately 12 11 p.m. Eastern Standard Time. And of course, I am in a trade. My timing was really good on this particular put credit spread. So as you can see here, let me pull up my pointer here. So, give me a second, guys. Let me pull up my pointer here. So, I got into this trade. So I sold the strike price of 51.15, and I bought the strike price of 51.10. Of course, that creates a spread, and because my short strike, the one that I sold, is closest to the price of the underlying. The underlying in this case is SPX, which is what I primarily trade. Because of the design, because the short strike is closer, that's called a credit spread. Right. So I take in premium, I take in money, I take in credit. So I actually took in $20 for this particular spread. So I'm in this trade for $200. My goal is always to get between $300 to $500 per day. Oftentimes I'll get more than that, and sometimes I'll take less than that. It just depends on what the market gives me. And actually, I may put on a call credit spread here a little on a little later on in the trading session. So the reason why I got into this trade is because if you guys have been following me, you know that I look to put on a trade once the SPX has dropped 20 points below the opening price. Now, the opening price today is 52.17. And so once the SPX drops 20 points below that, or goes above, goes 20 points above, then I'm looking to put on a trade. I don't automatically just jump into a trade. I'm looking to put on a trade, and I'm looking to put on a trade in a direction in which the market is moving. Now, so once that 20-point move has been made, I use what I call my levels of interest. So I have levels of interest that I send out to my members every day, and that I calculate every day based upon the expected move. Now, I don't use the expected move that's on the Tasty Trade platform, but I have another resource that I use for the expected move. And so my level one on both the call side and put side corresponds to 1 times the expected move. My level two corresponds to 1.5 times the expected move. And my level three corresponds to 2 times the expected move. Right. And so my first intention is to look, once the 20-point move has been made, I also look at the market internals to see what's going on with the volume, and also what's going on with regard to the number of stocks that are increasing versus decreasing on the New York Stock Exchange. And so I'm looking at that. Plus, I'm looking at the 11 sectors as well, right? Primarily the XLK and the XLV, V as in Victor, sectors, because those sectors, and also the XLF, F as in Frank, the financial sector. Those three sectors are the largest sectors that really have the largest impact, or the largest influence on how the SPX moves. The number one sector is the XLK. But that being said, once that 20-point move has been made, I'm looking to get into the trade. And so as you can see here, what I do is every day I mark off the 20-point move up or down on my chart. And the SPX actually broke that 20-point mark at 10:28. And so I actually waited, because again, I don't just jump into a trade. I waited to see, kind of gauge as to where the inflection point is going to be. In other words, where it's going to bounce and reverse in direction. And as you can see here, the 51.60 is the lowest price, and that's where it actually bounced. That's where the SPX actually bounced. And so I got into this trade right at 1059. So on this green candle here, pull out my pointer. So on this green candle here is where I got in, and as you can see, the SPX has slowly reversed its direction, and it's hitting back up to the upside. So, but nonetheless, I do expect for the SPX's price or value to be weighed by the fact that weighed down by the fact that the CPI number is coming out tomorrow. The CPI Consumer Price Index, which measures the rate of inflation, so that's coming out tomorrow, and so that's going to act as a weight, if you will, on the price of SPX. But nonetheless, so this is what I do. I keep it really simple, right? I keep my trading really simple. I don't try to complicate this. It actually oftentimes is very boring, you know. So this is the reason why I like to make videos, because this trading stuff is just very boring, particularly you know, when you're only, you know, trading one underlying, and you're only using primarily one trading strategy. It gets to the point where you become really proficient at this one underline, this one strategy, and your win rate increases significantly. Now, of course, I do have losses, but I try to cut my losses quickly, right? So I try to cut my losses quickly. And the thing about the SPX is that, you know, when the trade is going against you, it doesn't move so fast to where you have to make a rather, you know, rash decision, irrational decision, because the SPX doesn't, it kind of grinds oftentimes, you know. And so I'm able to cut my losses rather quickly. But nonetheless, for the most part, because I keep it very simple, I win most of my trades. So as you can see here, just looking at the proximity of the SPX in relationship to my position, um, it's 1218. You know, this is probably money in the bank. Now, anything could happen between now and 4 p.m. Eastern Standard Time, but I think it's safe to say that this position here is it's money in the bank.